broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Tuesday morning. We are coming to you live from the CNBC TV 18 Motilal Oswal studios as always. I am Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Hi, good morning, Prashant. Good morning, Nigel. Looks like it's not going to be such a bad day after all. We've had a bit of a recovery in the global markets. We've had some decent numbers as well. So all in all, I guess compared to what we've seen in the last week or so, today could not be such a bad day.
Well, that's right. And you have a better overnight handover. So that's pretty good news. And also, I think the next couple of days, we have big central bank action. So I'm sure we'll have to target that as well.
Today there is Bank of Japan, and tomorrow evening there is the Fed, so which we will react to on Thursday morning. Guys, let's just quickly tell you what you need to know, as we always do, and set the ball rolling. So we have had a pretty good last two-day bounce, right? Friday, the sell-off stopped. I mean, hopefully it stopped last Thursday. Friday we had a 200-point bounce on the Nifty. Yesterday we had a 100-point bounce on the Nifty. So that's 300 points in 2 days. Can't complain at all. Overnight, the handoff and the handover is pretty good. The US equities have bounced. The S&P is up about 1.2%. The Nasdaq is up about 1.16% as well. There is no real big driver in that sense, which has led to these gains, or rather one single driver, perhaps bits and pieces here and there. The Russell, by the way, was up. The Dow was up. So pretty much all indices across the board was a decent move. Now, two other things, right, which I think bode well for us. Dollar is weaker. I mean, actually, dollar sold off against pretty much all currencies. The composite dollar index is down about 0.4%. And oil prices, which had been threatening to sort of stay above 90, now they are closer to 87 or so, as compared to 92, 93, which has been the recent high. So again, there are two other important things. Equities are higher. So you got yields actually were up about 5 basis points, but we're choosing to ignore that for a while. You got the dollar, which is down about 0.5%, and the oil prices, which are down about 3% or so as well. Now, today, you've got the Bank of Japan meeting decision. I think we should have the decision out in the next 30, 40 minutes or so. Markets are watching closely whether there will be steps towards policy normalization. So there is something called a yield curve control, YCC. The Bank of Japan does not let yields in Japan, bond yields that is, government bond yields, to rise above a certain level. Because inflation is at 10-year highs in Japan, because market interest rates have been rising, pushing higher, will that policy be loosened a little bit? There's an article in the newspaper Nikkei which suggests that that is likely to be the case. So we'll have details in just a bit. And that's going to be important because the consensus before that article came out was that there'll be perhaps no change, very minor tweaks in that particular sense. So, but we'll know in the next hour, within the next hour. So two other things. We've got the Fed decision, which is, of course, tomorrow evening, which is tomorrow evening our time. And then, of course, the Powell commentary, which will also be important. And I think it'll be important also because of what the Bank of Japan does or does not do today. I mean, if there is a big normalization, Japan is the last big country which is sort of still in that very low interest rate, almost zero interest rate kind of environment. If they start to loosen things up, I mean, I think there will be implications, and we'll hear more on that. And, of course, what the Fed wants to do tomorrow evening. Any case, let's just come back and circle back to levels, etc. So yesterday's bounce, we got, as I said, a decent bounce. Same things repeated. No FII buying in cash. And shorts in index futures, FII shorts in index futures, that actually remains intact. Actually, if anything, from about 1.52 net shorts, that number has gone up to about 1.57. So, the market's bounced. So there is other activity, other participants, other players. The DI number was positive. It kind of completely negated that FI number. But day to day, kind of to glean what is happening and sort of, to get takeaways for prices based on daily FII institutional flows is very, very hard. And we've always said that. Let's just quickly take a look at the Nifty and the Bank Nifty. The Nifty first needs to cross the 38% retracement of the October fall, which stands at 19,280. It's about 140 odd points away from where we left off yesterday. So that is it's the first sort of meaningful resistance which the markets need to climb above. The Bank Nifty yesterday ended almost exactly at that 38% retracement. So, since we are there, the next two levels are the 200-day moving average, which stands at 43,188. That is the simple 200-day. And then you got the 50% retracement. So we're at the 38. The 50% retracement is at 43,348. These are, again, very near-term levels. You got to take it step by step because the decline was almost waterfall-like, very, very steep. So you got to take these recoveries on a daily basis as well. The small cap index, yesterday, I mean, they were middling. Both the mid-cap and small-cap indices, nothing very large happened. But the small-cap index is now almost at the 61.8% retracement of its entire fall. I mean, that fell 7%, and we're already at the 61.8% retracement. So, in a way, that's the strongest of the indices. It fell the most, but it's also recovered the fastest. And the number is at about 12,728. We left off at about 12,657. The GIFT Nifty will come up on your screen. It's a constructive kind of environment. A 6-point downtick is what the GIFT Nifty is indicative of. If you're trading, you'd wish that that's not 5 points, that's 30, 40 points lower in terms of a start, because that will give you a bit of a bounce. Remember, the market's put in 300 points on the Nifty in the last 2 days. So there has been a bit of a meaningful bounce. Not to say there can't be more, but you got to take each day as it comes. And today, the backdrop is positive. Sonia.
Absolutely. And there's a playbook here, right? Every time there is a geopolitical crisis, the market now understands that buying the dip has always worked in their favor. So this time around as well is no different, although it may be too soon to tell if this is a consistent recovery. But for now, the recovery is definitely underway. Just look at the way the Nifty has moved, right? The low that we hit on the 26th of October, in the peak of this Israel-Hamas war, was around 18,850, and the market is already up about 300 points from there. The US markets have seen a sharp rebound overnight as well, almost a 500-point, actually more than a 500-point rally is what we saw on the Dow. And there was large buying by domestic institutions in our own market as well. So we saw about 1,400 crores, 1,329 crores of buying from domestic institutions. Brent crude has cooled off to $88 a barrel. There are still Middle Eastern tensions, but nevertheless, despite all of that, Brent crude has now come off, which is, of course, a positive for markets like ours. The FOMC decision is keenly watched tomorrow, but there's an expectation that there would be a pause this time around. But given the way US bond yields are rising, that remains an important event. A couple of stocks that I'm watching today, and we have some good numbers coming in from a lot of, non-index large caps, if you want to call them that, whether it is TVS Motor, whether it's DLF, whether it's Blue Star. Something like a Spandana Sphurti has reported very good numbers. And, for a company like TVS Motor, record high margins, 11.1% margins is what TVS has reported. DLF has seen its highest ever collections. Blue Star has reported a 20% growth. And something like a Spandana Sphurti has reported, 70% AUM growth. So lots of good numbers that the street will look at today, and we'll be tracking all of that very closely. Looks like it's going to be a decent morning.
Well, that's right, Sonia. I just want to make 3 big points. One is with regard to October. I remember the start of this month, we were saying it's traditionally good for the bulls. Well, the bears have made a comeback. Yeah. The second factor is the bounce has been good, but it's come on very, very low volumes. And the third factor is today we have the Nifty Financial Services Index that plays out expiry. So I'll get to the Nifty levels. Let's focus on the first point, though. October. Well, the bears have made a comeback, and it's a bit of a rarity because it's the only second instance in the last decade where you have the Nifty that's going to be ending in the red with a cutoff around 2.5%. The last time we saw was 2018. For the Nifty Bank, well, it's the first time in close to a decade that we saw a negative month in the month of October. The last time we saw this was in 2012 odd. Now, the bounce, bulls will take it with both hands. But, they'll enjoy it. They won't be complaining about it. But actually, there are a couple of points that you need to highlight out here. Now, yesterday, if you look at the volumes, they were very, very low. The volumes yesterday on the NSE, cash market volumes, were 15% lower than the October average. So it was at around 58,000 crores. On an average, we've seen 68, 69,000 crores. That's point number one. Secondly, the FIs. In the cash market, the gross volumes are 20% lower in comparison to the October averages as well. And yesterday's move, more than 65% of it was led by two heavyweights. One is Reliance Industries as well as HDFC Bank. Both of them did well, and 68% of yesterday's move came in only because of that. And finally, with regard to yesterday's trade, yes, the Nifty ended higher, but your portfolios won't be feeling too good because the mid and the small cap indices actually were lagging in yesterday's trading session. So the bounce has been good, but these are a couple of points that you should be noting. What do the FIs do? Well, we were talking about them being net short. On Friday, I recall we started a new series and everyone was saying, hey, they are very, very aggressively net short. But we made this point. The last time they've been so aggressively net short, actually the series wasn't too bad. And for the time being, in fact, it's working out that way. Yesterday, they have added more shorts as well, close to 6,000 short contracts. So in absolute terms, 1.57 lakh contracts on the short side. In percentage terms, it's at around 88%. Options data, well, the 19,000 put was fairly active in trade. The premium started off close to around 75 rupees. It ended at around 35 rupees. So going by, there is some writing at that level. And the last two sessions, we've gone to 18,930 and bounced off that. The 18,900 mark becomes crucial in terms of a support. If we breach that, then the recent low, 18,838 is what you're looking at. While on the upside, the 19,250 to 19,300 positioning is such that we don't get past that level. The Nifty Bank, well, that's made a comeback as well. Even in yesterday's trading session, it did bounce up. It's hovering around the 200 EMA. You want the Nifty Bank to cross this and trade about that. Try to make a dash towards that 44,000 odd mark. So that's a crucial level. For starters, well, we're going to be starting as flat as can be. But as I said earlier, the bounce has been good. However, volumes have been on the lower side. So you want to see an up move on higher volumes. That's what will give the bulls some bit of confidence.
Okay, and we also have a lot of big events, right? Apart from the FOMC meeting, there is the auto sales numbers for the month of October that come out tomorrow. So, that'll give you an indication. They're generally a barometer, sentiment barometer, so we'll be tracking that very closely as well. But on the equities front, we have Sanjeev Prasad of Kotak Institutional Equities, who says that their analysis of the top performing mid and small cap stocks suggests that the outperformance may have been driven by a combination of a few things. First is improved fundamentals in a few cases. Second, a strong narrative in many cases. And third, possibly low free float. Many low free float stocks have seen a sharp surge in delivery volumes, which may reflect the market's heightened expectations. The outperforming companies may need to show greater improvement in their financial and operating performance for their recent strong stock performance to sustain.
Okay, well, that's Sanjeev on equities, but let's get you some money market views as well. This is Abhishek Goenka of IFA Global, who says that despite risk aversion given war-related uncertainty, collapse in forward points due to dollar shortage and continuing outflows on account of FPI sell-off in domestic equities, the dollar-rupee pair continues to remain incredibly resilient and sticky. He says all eyes are on the Fed meet tomorrow. Overall, he expects the rupee to trade between 82.7 to 83.7 to the dollar in the medium term.
Okay, and on the bonds, Ajay Magnolia of JM Financial says that the market is expected to be steady due to lack of any significant domestic cues. He expects the US Fed to pause tomorrow. He says rising fear of open market operation sales by the RBI in November is keeping traders at bay, and expects the 10-year benchmark bond yield to trade in a narrow band of 7.35 to 7.40% today.
Well, there's a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. But for the time being, we run you through the list. We're looking at Marico, TVS Motors, GMR Airports, DLF, SRF, Blue Star, Spandana Spurti, and Vesuvius, all of them on positive news flow. While on the flip side, UPL and Butterfly Gandhi Mati, they'll be reacting to negative news flow.